Hey guys, happy Monday. Brad Nickham from Nest Mortgage Group here. Hey, I know it's been a while since I've done a Monday update, but it's also been a while since I've had some news that I really thought was worthy of putting together some content and sending it out. So this is some pretty good information, I think, for the future of the real estate and mortgage industry for the next 12 to 24 months. So I thought I'd share it. One of the things that I watched in a video today was talking about really how many refinances there are potentially out there if interest rates just fall to 5.5%. That number is 6 million people have mortgages that are at least 1 full point or 6.5% that could refinance their mortgages. So in 2023, there were only 4 million mortgages written, period. That's purchases and refinances combined. So that's a significant increase that we could see in mortgage production. But I know as realtors, you're all saying, well, how does this really affect me? I need purchases. Well, on the purchase side, one of the biggest headwinds we've seen is what's called that lock-in effect, where buyers may want to move into a bigger home, but the rate differential compared to the rate that they're paying now is just too much. Unlike a refinance, you need about 1 full point lower in rate to refinance. On a purchase customer, they're likely to move forward with between 0.5% and 1% higher than whatever rate they have. So let's say rates go down just 1% below the current rate that or just 1% below the rate above what they currently have. That'll stimulate them selling their homes and purchasing new homes. So if we see rates fall down to levels in that 6.5 range or 6 5/8 range, that represents 5.5 million buyers that rate is only 1% higher than their current rate. If we drop this 6.125, that would open up 7.5 million buyers that could buy a house. And if we dropped to 5.5, that would open up 9.5 million people that currently feel that they're locked into their house and they just don't want to make that move and go to that higher rate. So if you look at those numbers and where rates are projected to be potentially in a year from now, that's a lot of great potential business. Another thing that is happening right now that I felt was pretty strong as well is, those numbers are all just based on people doing fixed rate mortgages and people that have fixed rate mortgages. Adjustable rate mortgages have not really been real competitive due to the inverted yield curve, which we've seen for so long, which means short-term rates actually have higher yields than long-term rates. So the share of ARMs that have been being done over the last 2 years have only been 5.8% of the loans written. And normally ARMs are in the 15 to 20% range. Now that we currently are starting to see the yield curve become uninverted, we could see lower rates in ARMs sooner than 30-year fixed mortgages. And that could also help, one, move a refinance boom, but also get that lower rate where somebody can jump out of that 30-year fixed maybe into a 5/1 ARM with a payment that doesn't increase that much and be able to get that house listed for sale and move and open up that locked-in effect. So I think we have some really great things on the horizon where we could have stronger third and fourth quarters than what we normally do. This is a busy news week this week. We get existing home sales tomorrow. On Wednesday, we receive Mortgage App's new home sales. On Thursday, doable goods and Q2 GDP reading, and also an initial jobless claims. And Friday, we get the Fed's favorite inflation report, which is called PCE, Personal Consumption Expenditures. And there is a belief that report is either going to come in with a 0.1% lower in inflation or potentially a flat inflation number. And those are really good numbers year over year. Hey, here at Mortgage Express, my team and I work really hard to be incredibly efficient, closing all loans in less than 30 days. Loans are going real quick. In fact, we had a loan with an appraisal that we closed in 13 business days. And we just had one over July 4th with an appraisal waiver. We had that loan cleared to close in 10 days, and that counts the holiday of July 4th in there. So with those appraisal waivers and close them fast. Underwriting times running about 48 hours, condition clearing running about 24 hours. So we're getting those done really quick. Again, 20% down, buyers getting appraisal waivers. That's also pretty awesome. So if you've got a buyer that needs pre-approved evenings, weekends, holidays, whatever, don't hesitate to give me a call. And thanks for tuning into this one. And I hope you have a fantastic week and hope to talk to you soon. Thanks. Have a great day.